Hello day traders, you are watching an analytical review of the New York trade. Wall Street investors were unimpressed by the Fed's rate hike by 25 basis points and the prospects of a sharper rate hike of 50 basis points at the nearest meeting. Major stock indexes extended growth on Tuesday and closed with gains. The pre-market today is not so optimistic. Will the market sentiment turn sour soon? Let's try to figure it out. The Dow Jones closed 0.74% up yesterday. The Nasdaq rose 1.95% and the S&P500 added 50 points, or 1.13% to close at 4,497 points. Thus, the benchmark stock index gained over 6% for the last 4 days. The pre-market today does not look optimistic. Futures on the key Wall Street indexes fell 0.4 or 0.7%. The S&P 500 is expected to trade in the corridor between 4,470 and 4,550 points today. The start of the trading week confirmed the viewpoint that investors are mentally ready for the Fed's tough measures against inflation. Investors are again in risk-on mood because the geopolitical situation in Ukraine is not getting worse. Russia and Ukraine are engaged in the talks on a peaceful agreement, and the US economy proves its resilience. High-tech stocks and the stocks of service companies triggered a spike on Wall Street yesterday, and today optimism is waning amid a rally in commodity prices. Another market catalyst today is a new speech by Jerome Powell. The economic calendar reminds us about data on US new home sales and US oil inventories. If these reports reveal decent data, the stock market will rebound. Otherwise, in case of poor data, the market will make a downward correction. The US dollar index is locking in at around 98.50. The greenback lacks impetus for a new rally. It might happen today. The index is likely to trade in the corridor between 98.20 and 98.80. Despite the dollar's broad-based strength in the medium term, the situation is tricky today. On the one hand, the greenback could regain its footing as a safe haven asset. On the other hand, the status of the world's reserve currency raises doubts. Saudi Arabia stated that the yuan could be used to settle payments for its oil exports. Earlier, international payments for crude were made only in dollars. That provided the US currency with the support, and the greenback will have to compete with the yuan in the near future. Such prospects might undermine the reign of the US dollar in the long term. However, it will remain firm in the short and medium term. The pre-market was promising for the US dollar. Market participants predicted that the news of today will reinforce the greenback. Market sentiment is uncertain ahead of a few summits this week. The USD CAD pair closed yesterday slightly lower at 1.2585. The expected corridor for today is defined between 1.25 and 1.27. The greenback has a chance to assert strength amid Powell's speech and macroeconomic data. At the same time, the upcoming summits of NATO, the EU, and the G7 leaders fuel a rally in the oil market. Oil prices are heading for their highs of early March. Berlin said that the formal embargo on Russian oil had not been declared yet. However, oil prices are extending a rally due to concerns about energy deficit. And in this context, the Canadian dollar has a fair chance to gain ground. Traders are reweighted to the steady uptrend in the commodity market, neglecting developments in the crypto market. Bitcoin began this week with a confident growth but did not regain bullish momentum. Today, the digital token is again trading lower at 42,161. The chance of further growth is slim. Besides, Bitcoin will hardly escape from a wide range between $32,000 and $45,000. Analysts say that sluggish trading of the flagship crypto suggests some momentum is growing. Here is a recap of today's New York session. On the one hand, new sanctions push oil and commodity prices to multi-year highs. On the other hand, the non-stop talks between Russia and Ukraine do not allow investors to abandon hopes for any peaceful solution. Please beware of a high volatility on Thursday ahead of several crucial events. Trade prudently and keep track of news. See you tomorrow.